Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a look at ASX-listed defence stocks amid the ongoing conflict in the Middle East. The war has seen market stress build at its fastest pace since the Liberation Day tariff tantrum in April. This, according to a Bank of America index tracking options implied volatility across equities, commodities, rates, and currencies.
I think initially, if you go back 2 weeks ago, just after the war started, there was a fairly mild reaction in investment markets. And that, I think, reflected this assumption that sooner or later Trump would do a taco and we'd all be fine. As it's turned out, he did actually try a taco on Monday by saying the war would be over very soon, oil prices would plunge. Markets believed it for a little bit, a day or two, and then, of course, they've gone back to panicking again because it's quite clear that the war is still continuing, has a way to go yet. And, of course, I think there's a realisation that taco only works if he has full control, and he doesn't have full control.
Well, ASX-listed defence stocks such as Electro-Optic Systems, Drone Shield and the shipbuilder Austal have been strategic stocks to look at amid the escalation. Shares in Electro-Optic Systems have risen almost 650% over the past 12 months and recently hit an all-time high after the defence technology manufacturer secured 2 orders for counter-drone systems, including one linked to needs arising from the US-Israel war on Iran. Technical data shows shares in a strong bullish trend confirmed by multiple indicators. And analysts are upbeat about its outlook with the average broker recommendation a buy. But the mean target price of $9.14 suggests the stock is about 20% overvalued. Ord Minnett sees EOS as a future dominant global player in counter-drone warfare and space control. It has a speculative buy rating on the stock with a $12.95 target price. But some investors have raised concerns after the stock market operator flagged inadequate disclosure of market-sensitive information regarding the nature of one of its recent contracts.
A few things there would keep me away. If you're there, you make good money, I would take some off the table, and otherwise, maybe look to play that defence thematic in other ways.
Well, another way has been in Drone Shield shares. Shares have risen 300% over the past 12 months, and technical analysis show they appear to be in a long-term uptrend as confirmed by multiple indicators.
I do like Drone Shield. It's at the expensive end of the range here at the moment, but obviously it's extraordinary circumstance. But overall, I think you'll see more of a civilian usage for it, and that's something that Drone Shield's really focusing on, is expanding that civilian need.
Well, analysts are bullish on the outlook for Drone Shield with an average target price of $4.90, suggesting shares can rally a further 15%. And in fact, Bell Potter has labelled 2026 the year of the drone and expects the next 12 months will be an inflection point for the global industry, with countries poised to unleash a wave of spending on detect and defeat solutions. But news of insider selling, including from CEO Oleg Vornik, saw the share price drop dramatically in November. Despite the share price drop, the company reported record full-year 25 revenue, and Vornik remains confident of its outlook.
Civilian market hasn't even really started. So you think about data centers, airports, critical infrastructure, and we're saying that the total addressable market is roughly $30 billion US for the military, now $30 billion for the civilians. So roughly over the next 5 years, I think our military and non-military customer mix is going to be close to 50-50. World Cup in the US this year will be really interesting because I think that'll be the gateway into police or public safety, starting to use counter-drone in mass, and this will be hopefully then filtering down to other non-military end users.
Meanwhile, some analysts believe a better way to benefit from the conflict is by looking at international names.
Also been looking at the big US players like Northrop Grumman and also Lockheed Martin, just because they're obviously the big players. With Drone Shield and EOS, they're a lot more volatile, as we've seen, and they just whip around like it's pretty wild. Whereas you see those larger stocks, the larger names, they're a little bit more stable, and you can be a little bit more confident in sort of holding them in your portfolio for the long term. Whereas, Drone Shield, EOS, they're more of a speculative kind of trade, I would say.
And Lockheed Martin shares listed on the NYSE are up almost 40% over the past 12 months, outperforming the index's 14% gain. And that is your IG Macro Intelligence. We'll see you next time.